Are you caught in the age-old debate of whether owning a home is better than renting? There's no one-size-fits-all answer, but today we're going to break it down and look at the pros and cons of each, so you can decide what's best for your financial future. Whether you're dreaming of owning your own place or enjoying the flexibility of renting, this video is for you. We'll go beyond the surface and discuss how each option can affect your wealth, stability, and long-term goals. Stick around until the end, because the final point might change your perspective on what truly defines financial success when it comes to owning versus renting. If you're ready to make the smartest choice for your future, hit that like button, subscribe to the channel, and let's get started. Number 10. Building equity versus no return on rent. One of the main arguments in favor of owning a home is the potential to build equity. When you own, a portion of your monthly mortgage payment goes toward paying down the principal, which means you're building equity, a form of forced savings. Over time, as you pay down your loan and home values potentially increase, you own more of your home, which can become a significant financial asset. This is a powerful way to build wealth and create a sense of financial stability. On the other hand, when you rent, your monthly payments go directly to the landlord, and you don't get any of that money back. It's often said that renting is like throwing money away, but that's not entirely accurate. Renting pays for the space you live in and the flexibility to move when needed. However, when comparing it to homeownership, it's clear that the financial returns are different. Over the long term, owning a home can significantly increase your net worth, especially if property values rise. This is one of the key reasons why many people view buying a home as a wise investment. However, it's important to consider the costs of homeownership, maintenance, property taxes, and insurance, which can impact how much equity you actually build. If these costs outweigh the benefits, renting could be the smarter financial choice, especially if you invest the difference elsewhere, such as in stocks or a retirement account. Number 9. Flexibility versus stability. Renting offers flexibility that owning a home simply can't match. If you're the type of person who likes to explore new places, has a job that requires frequent relocations, or simply doesn't want to be tied down, renting might be the better option. With a lease, you can move out at the end of your rental period, or sometimes even break your lease with minimal penalties. This gives you the freedom to change your living situation without the hassle of selling a property. However, this flexibility comes at the cost of stability. Renters face the possibility of rent increases, changes in lease terms, or even eviction if the property owner decides to sell. Homeowners, on the other hand, enjoy stability. When you own your home, you're not subject to a landlord's decisions. You have the freedom to renovate, decorate, or modify the property to suit your lifestyle. Your monthly mortgage payments are also more predictable, especially if you have a fixed-rate mortgage, making it easier to budget for the long term. While homeowners are more rooted in one place, it's a trade-off for the stability and control they gain over their living situation. If you value freedom and mobility, renting is the better choice. But if you crave stability and the sense of permanence that comes with owning property, buying a home might be the way to go. Number 8. Upfront costs. Down payment versus security deposit. One of the biggest barriers to homeownership is the upfront cost. When you buy a home, you typically need a substantial down payment, often 10% to 20% of the purchase price, plus closing costs, appraisal fees, and other expenses. This can be tens of thousands of dollars, depending on the home's value. In contrast, renting requires significantly lower upfront costs, usually just a security deposit and the first month's rent. This lower entry cost makes renting more accessible, especially for younger individuals or those without significant savings. The lower initial costs allow renters to allocate their money elsewhere, such as investing in stocks, building an emergency fund, or paying off debt. However, the down payment on a home isn't lost money. It represents an investment in your property, building equity from day one. If home values increase over time, that initial investment can grow significantly. But it's important to remember that tying up your savings in a down payment means less liquidity for other financial opportunities. Homebuyers must also consider other hidden costs, such as repairs and maintenance, which can add up quickly. Renting can be a better choice if you want to keep your cash accessible, or if you're saving up for a bigger investment. It's all about assessing your financial situation and deciding whether you're ready to make a significant long-term commitment, or if you'd prefer the flexibility of lower upfront costs. Number 7. Maintenance and responsibility. Owning a home means taking on all the responsibilities that come with it. Need a new roof? You're on the hook for thousands of dollars. Appliances break down. It's your responsibility to replace or repair them. Routine maintenance, landscaping, and unexpected repairs can add up quickly, both in time and money. Many homeowners are surprised by how much time they spend on maintenance tasks, from mowing the lawn to cleaning gutters to dealing with plumbing issues. While some people enjoy the sense of pride and ownership that comes with maintaining their property, others find it burdensome and costly. Renters, on the other hand, don't have to worry about these responsibilities. Most maintenance and repair costs are covered by the landlord, allowing renters to save both time and money. If something breaks, it's a phone call away to have it fixed, usually at no cost. This makes renting an attractive option for those who want a hassle-free living experience or have busy lifestyles. However, this convenience comes at a cost. Renters might not have the freedom to make changes or improvements to their living space and are often subject to the landlord's decisions regarding maintenance and upgrades. Homeownership gives you control but requires time, effort, and additional funds to keep the property in good condition. The key is to weigh whether the added responsibilities of homeownership are worth the cost, both financially and personally. Number 6. Potential for appreciation and wealth building. One of the biggest financial benefits of owning a home is the potential for property appreciation. Over the long term, real estate tends to increase in value. Homeowners can build wealth as their property appreciates, allowing them to sell for a profit or use that equity for other investments, such as starting a business or buying additional properties. In many cases, real estate appreciation outpaces inflation, making it a strong long-term investment. This appreciation is one of the primary reasons people view homeownership as a wealth-building tool. However, it's not a guarantee. Real estate markets can be volatile, and there's always the risk that property values could stagnate or even decline. Renters, on the other hand, don't benefit from appreciation, but they also don't bear the risk of property value declines. Instead, they can invest their money in other areas like the stock market, which, depending on market conditions, can yield higher returns. This strategy allows renters to build wealth without the need to purchase property. Deciding whether to rent or buy depends on your confidence in the real estate market and your personal financial goals. If you believe your local market will continue to grow and want to be part of that appreciation, buying might be the way to go. But if you're concerned about market fluctuations or want to focus on other investment opportunities, renting can provide the freedom to diversify your portfolio. Number 5. The impact on monthly cash flow. When you buy a home, your monthly mortgage payment may include more than just the principal and interest. Property taxes, homeowner's insurance, private mortgage insurance, if you put down less than 20%, and maintenance costs all factor into your monthly expenses. These additional costs can push your monthly payments much higher than rent for a comparable property. Renters, on the other hand, have a single monthly payment that covers everything, making it easier to budget. There are no surprises, no sudden roof repairs or unexpected tax increases. This predictability can be beneficial for those who want to maintain a tight budget or don't have the financial cushion to handle unforeseen expenses. While homeowners may see their monthly expenses decrease over time as they pay off their mortgage, renters could face annual rent increases depending on market conditions. Homeownership offers the potential for more financial stability in the long run, but renting provides predictability and flexibility in the short term. Evaluating your cash flow situation is crucial before deciding to buy or rent. Can you comfortably cover the higher monthly costs of homeownership while still saving for emergencies and other financial goals? Or do you prefer the predictability of renting while keeping your finances fluid? Your answer will play a significant role in determining which option is best for you. Number 4. Freedom to personalize versus limitations. Owning a home comes with the freedom to make it your own. You can paint the walls any color, renovate the kitchen, or install new flooring without asking anyone's permission. This ability to personalize your space can make a house truly feel like a home and allow you to tailor it to your needs and preferences. Many homeowners enjoy the creative freedom that comes with ownership and see home improvement projects as a way to increase the value of their property. But this freedom also comes with responsibilities and costs. Any changes you make must be paid for out of pocket, and poor renovation choices can actually decrease your home's value. Renters, by contrast, have limitations on what they can do to their living space. Major changes are usually off the table, and even minor alterations often require approval from the landlord. However, this lack of responsibility can be a blessing in disguise. Renters don't have to worry about sinking money into renovations or dealing with the hassle of remodeling. If the property isn't perfect, they can simply move when their lease is up. The choice between freedom and limitation often depends on your personality and priorities. If you love to customize and make a space your own, homeownership may be more fulfilling. But if you prefer a low-maintenance lifestyle and don't want to worry about renovations, renting could be the better option. Number 3. Community and sense of belonging. Homeownership often comes with a sense of community and belonging. Many homeowners stay in their homes for years, developing deep roots and relationships with neighbors. They become part of the local community, participate in neighborhood events, and take pride in contributing to the area's growth and stability. This sense of belonging can create a strong emotional connection to the home and neighborhood. Renters, on the other hand, may not have the same sense of community, especially if they move frequently or live in areas with high tenant turnover. It can be harder to build lasting relationships when you know you might move again in a year or two. However, some rental communities, like apartments or condos, foster a strong sense of camaraderie among tenants. These communities often have shared amenities and social events that encourage interaction and friendship. Whether you value long-term stability and being part of a neighborhood, or enjoy the diverse social experiences that come with renting, your decision may hinge on how much a sense of community matters to you. If feeling connected and rooted in a specific place is important, owning a home might be the better option. But if you prefer meeting new people and experiencing different communities, renting offers more opportunities for change. Number 2. Inflation protection and cost stability. Owning a home can act as a hedge against inflation. As the cost of living increases, your mortgage payment stays the same if you have a fixed-rate mortgage. This means your housing costs become more affordable over time compared to renters, who may face rising rents due to inflation or increased demand for rental properties. Homeowners also benefit from the fact that, as inflation rises, so do home values. This can further increase the wealth of homeowners while renters have to cope with higher costs without the benefit of growing property value. On the flip side, renters have to deal with the unpredictability of rent increases, which can significantly impact their finances if rent costs rise faster than their income. Renting offers no protection against inflation, making it harder to predict and plan for long-term housing expenses. However, renters can still take advantage of inflation by investing the money they save from not having to cover maintenance costs or property taxes in inflation-protected investments, such as Treasury inflation-protected securities, TIPS, or stocks that have historically outpaced inflation. If you value stability and protection against rising costs, owning a home might be the right choice. But if you prefer the flexibility to move or adjust your living situation based on changing financial circumstances, renting could be more appealing. Number 1. Financial flexibility and opportunity costs. The biggest difference between owning and renting often boils down to opportunity cost. When you buy a home, you're committing a large portion of your money to a single investment, which can limit your financial flexibility. The down payment, mortgage payments, and home maintenance costs can tie up capital that could otherwise be invested in a diversified portfolio, potentially yielding higher returns. Renting, however, provides more liquidity and the ability to invest your savings in other assets. For instance, If you're able to invest what would have been a down payment into the stock market or a business venture, you might see higher returns than from homeownership alone. Renting also means you're not locked into a specific location. If a new job opportunity arises or the housing market changes, you have the flexibility to move without worrying about selling a property. The opportunity costs of home ownership can be significant, especially if housing markets slow down or if you encounter unexpected expenses. However, for those who value stability, the forced savings nature of a mortgage and the potential for appreciation make it worthwhile. Ultimately, choosing between owning and renting is about weighing your financial priorities and personal circumstances. There's no right or wrong answer, just what's right for you and your financial future. Whether you choose to own or rent, the key is to make the decision that aligns with your financial goals, lifestyle, and future plans. Owning a home offers stability, wealth-building potential, and a sense of community, while renting provides flexibility, lower upfront costs, and less responsibility. Which option is best for you? Let me know your thoughts in the comments below. If you found this video helpful, make sure to hit that like button, subscribe to the channel, and stay tuned for more tips on making smart financial choices. Thank you for watching, and I'll see you in the next video.